What's going on, YouTube? Today we are going to look at market setups for GBPUSD, which I normally don't trade, but I like the setup that it has. Oil, which I normally don't trade, but I like the setup that it has. And of course, gold and the indices. So without any further ado, let's go ahead and get into it. All right. I usually do not trade GBPUSD, but I just happened to, I said, let me look at a Forex pair. Let's see what's going on. And I saw GU. This is why I am anticipating trading it this week. If you look on the weekly, we see this high. I don't want the angle. Bam. So this high was taken out. Now it's time to push down into these lows. So what I expect, anticipate, hope for, we had a break of structure here on March 1st. Market took off. It has yet to come back. So it's showing signs of pushing back. I believe that sometime this week, GU should come back and retest these areas. If you see my grid here, this is because we have an order block right here, or institutional candle, or banker's candle, whatever you want to call it. I believe that GU will come back to retest this area. And when it does, I am looking forward to start dropping into some of these lows. Down in here. If it does that, which I have a strong inclination that it will, you're looking at a 1 to 9.5 risk to reward ratio. So if you trade GU, be patient on it this week. Wait for it to come back and either retest these levels or break this level. One of the two. Oh, excuse me, this level. If it breaks this level, let's see what the potential could be on a trade. Let's say it breaks this. Looking at a 1 to 4 possibly. But for me personally, I would like for it to come up and retest. That's the only way I would trade GU. If it comes back and retest this order block, then I can get a 1 to almost 10 risk to reward. It means for every dollar that I risk, I stand to make $10. So that's my analysis on GU. Again, we have an open order block that has not been filled yet, and the market is showing signs of pushing back up to retest. So we'll be patient. We'll see how that plays out. All right, let's go top down. You know what? I want to start with gold and oil today. So I was drawing up gold on the 4-hour. And we had a head and shoulders inside of a head and shoulders. We have a head and shoulders here, but then we have another one here. Come on. There. Didn't come back. Look at that. So, Philly, can you verify that for me?
Yeah. Gold, the next major level should be coming down to 1908. That's exactly what you have. So yeah, let's see what happens.
Cool. Now, if it violates that head and shoulders, as you can see, I have it for a buy to retest the highs. I believe these are all-time highs too. Nope, they're not. It's been a minute since it's been that high. So let's see what happens. Now, because, and I throw the word because around loosely in this case, because of that, for the past couple of months, the indices in gold, which they do quite often, have been moving in opposite directions. As you see, gold stands to push back down. Look at the indices, they are pushing up. With that being said, I see the indices pushing back up this week before they fall back off. I do believe that the indices will fall back off. Doesn't matter what I believe, though. As you all know, I don't trade what I believe. I trade what price gives me. So if the indices continue to push up, I have targets marked. I do not believe that they will push higher than the previous highs. If so, I just trade them up. Doesn't matter to me one way or the other. So we'll see what happens. On the daily, if you use momentum-based indicators, for instance, from time to time, I'll use the stochastic RSI to see what momentum happened. And as you know, indicators are all lagging, so I'll use them to see what happened to make sure that I am still in the proper direction. That's how I would determine a lot of times if I should stay in trades. I don't use the indicators to determine if I take a trade, but I will use them to determine if I stay in trades. And we see some overbought activity on the stochastic with the indices. So let's see if we'll get these pushes up. Same thing with NAS. I have it marked for the push up. I don't, if you see these lines on here, that's because I was,
Please mute y'all lines. Please mute y'all lines.
I muted them. Appreciate it. These lines are showing breaks of structure, so don't worry about these. I will remark up with entries, but I was just showing what is happening on the indices. I do believe gold will push way down. Okay. If you look on larger time frames, see all of these candles? We had this area retested. We have yet to come back and mitigate these candles. So I believe that we could possibly see gold coming back into these zones. So we'll just see. James, just so I'm clear, your targets are zones where you're into trade, correct? On the indices, my targets are zones where I would enter. That is correct. We never know where the markets are on a Sunday at this time. So these are just analyses based on what's happened. When the markets reopen, I'll go back and modify based on what the markets are doing at the time. When the market opens at 6 for these particular assets, it could be way up into the targets as we've seen before, or it could be back down into these areas. So we'll just see what happens. So going back to the 4 hour, I like to use the 4 hour and the daily for my direction. I think the indices will push up into these targets based on or in conjunction with what gold, I believe, will do. Same with NAS, same with SPX. Here's my sleeper though. About 2 weeks ago, I started trading oil again. Here's my sleeper. Look at what I have marked up for oil. It went ridiculously high the past 2 weeks. I believe that oil will push back up into those ranges. If so, and you have the balance, some of you, if you trade oil, would make more money this week than you've ever made trading. Because the way oil moves with a 0.01, it's $10 per dollar move. Imagine you're trading above a 0.01, just to give you an idea of what's possible. Let's say oil follows this markup to the T. That's $186 with a 0.01. So imagine you're trading standards. That's why I'm liking oil. If it doesn't break this soon, I believe it will come back to retest this area because there are some unfilled order blocks. So we'll see. But I'm looking heavily at oil this week to see what happens. Looking heavily at gold to see what happens. That's the thing about marking up. Even though you see 6 assets, I'm not telling you to trade all 6. I'm telling you to find one that fits your analysis the best and trade that one. You shouldn't be trading 2 indices at a time. One is enough, especially if you have a smaller balance. So just be patient. What's an idea of what someone's balance should be around to play in that market? Gold, oil, which one? Alfred asked the same question. For oil, I recommend at least $200 with a 0.01. Because again, every dollar is $10. So every 10 cent is $1 required of your balance. Give you an example. Let's say you wanted to trade this. Let's say oil made this break and you want to trade it. My stop loss is tight, but your stop loss should be about right here. So that's a 40 with a 0.01. That's a $40 risk. Does that make sense? So if you have a $100 balance, $40 is super risky as a risk. So this is a 5% risk on a $200 account. So if you're willing to take that, cool. I'll leave that there. That's my markup for oil. Gold, I'm curious to see what gold does. Either way, I'm looking to trade it, whether it goes up or down. I'm looking to trade gold this week. I'm looking, hopefully, for the push down and break below this target, because if it breaks below here, we're looking at nice potential ride. I see you, Philip. Anybody have any specific questions? This doesn't have to be a long call today. I have it all marked up. Markets are looking good for this week. So want to make sure y'all make some money.
Doc,
Any notes on yen pairs? I don't really trade yen pairs, but let's take a look at anyone in particular. Whitney?
Last week I was following GJ and AJ.
GJ and AJ. Let's take a look. Oh, here you go. Look right here. All right. And it's already demonstrating it wants to push down. For me personally, I would look for GBP JPY to come up into these zones because you have an order block that was not filled here. See this? Well, you can say it was filled with this. So I will look for it to come up into these zones and push back down. If not, if it breaks through, let's see what we have on the daily. Yeah, I would be looking forward to come up and push down before it breaks out. But if it decides to break out, here's the zone where you'll be looking for it to break. And then your next, oh wow, that's a wave. Your next zone is way up here.
Wow. What what year or month was that?
Man, this was May 26th, 2017 or June of 26.
Yeah.
A long time ago. So look for a push up or push down before it pushes up. That makes sense?
Yeah. Thank you. Thank you. Yes.
You're welcome. Euro USD. Look at Euro USD. All right. We're in a downtrend. Let's drop down to daily. I would look for Euro USD to come up into these zones again, an unfilled order block. So if I draw it out, put my new order block to here, here. Then I would be looking to shorter. Into these areas. So let's see what that looks like in terms of risk to reward. So let's say it comes up here, we short it down to here. Net 1 to 3, 1 to 4. But if it's pushing down here, it has to come lower. So we're talking about down into these areas. Because the market pushes up to break structure. If we take this down, we're looking into 1 to 5, 1 to 6. So that's what I would be looking for Euro USD. Push up into these zones because of this order block, and then a push down here and below. Make sense, Danny? All right, so I would drop all of these in the chat.
Thank you, Doc. Makes sense.
You want to drop all of these in the chat. Again, looking heavily at oil, looking heavily at gold. And of course, I'm always looking at the indices and looking heavily at GU for this week.